Ladies and gentlemen, the S&P 500, the broad markets across the world are getting destroyed today. The S&P almost at a new 2022 low. This is something a lot of people thought would not happen, but it is happening this week. Now, we have some things that are going to be happening tomorrow, like Fed Jerome Powell speaking, like some other Fed speakers speaking, that will move things around. But the big story of today is actually the US dollar strengthening, as well as the pound dropping in value in a very substantial way. And what the Bank of England had to say did not help the situation and is actually causing their currency to weaken compared to the dollar. Now, you got to remember, when we're talking about currencies weakening or strengthening, it is all based off of the dollar because these other currencies are pegged to the dollar. So when I say the pound is weakening, that means the pound is weakening compared to the dollar. When I say the dollar is strengthening, that means the dollar is gaining strength against other global currencies. Now, why is that a bad thing, and why do the markets hate having a strong currency? It's because if you are a Samsung, or you are an Apple, or a Microsoft, or an Amazon, or any other company that takes in foreign currencies, when you take in those currencies and have to convert it to dollars, you're going to get a lot less dollars, and it hurts the exporters of America the most. Now, this situation with the pound and what's going on with the England currency, that's a little bit of a different story because of the new change of regime over in Europe, or in England, I should say. A lot of investors are not liking that so far, but this article says Bank of England says it won't hesitate to hike rates after pound falls to historic low. The sterling fell as much as 4.8% to trade below $1.04 in the early hours of Monday morning, extended losses from late last week. The UK currencies has since pared some of its losses, trading 1.3% lower at $1.07 per US dollar, as analysts predict the Bank of England may need to raise interest rates more aggressively. And that's exactly what England said, is that they're going to raise rates more aggressively. So, of course, why would the sterling or the pound, whatever you want to call it, not devalue, right? It's simple that that's going to happen, right? Now, when you're thinking in regards to the global economy, right? Who's doing good? Who's doing well? Well, not a lot of people are doing good, but Europe, especially England, is not doing so good. Just in regards to economic activity, they're probably already in a pretty deep recession. You have the energy crisis. You have so many other things, high inflation going on in Europe, especially in the UK. More weakness over there is not going to be a good thing for our markets as well. And that's really a big story of what is happening today. Now, if we look at the US dollar as well, and go ahead and pull it up, it's called UUP. If you're trying to chart it out over on Webull or on another brokerage, you can see that market highs and lows typically correlate with the strength of the US dollar. The peak of the stock market in January of 2021, well, pretty close to the peak, it was really high at this point, was when the dollar was weakening, when the dollar was, at $24.09 here on the index for UUP, right? During the COVID crash, the dollar shot way down, and then it shot way up, and then it shot back down again, correlating with the low of the stock market, which was March 19th, 2020, and that was the high of the dollar. Well, now look at the chart. I mean, you've steadily been going up, but right now you're at a new pretty much all-time high. I believe this is an all-time high. For all-time high for the dollar. And what's the markets doing? Well, you are at a 2022 low currently. And we've been getting beaten down for the past 9-10 months now in the stock market. For a lot of people, it's been about a year that your portfolio has been taking a big hit. A lot of this is revolving around the dollar, because after all, if you are going to convert and lose 10, 15, 20% on your conversion ratio for these large companies, right? Apple controls 7 to 7% of the S&P, 12% of the Nasdaq, if they're taking a 10 to 20% hit on their conversion of foreign currency when they do most of their business overseas, you can tell how that would have a big impact on the fundamentals of that company. And when you have companies that control so much of the market weighting of the index, and almost everyone is an index investor, well, you can see how quite rapidly it can start to bring down valuations. Now, I think the only thing that's really going to bring the dollar down in a big way that could really help the markets, and I think this is really the one thing that is pretty obvious, is if the Fed U-turns. If they say, even if they came out, one of these Fed speakers this week and said, there is a chance that the Fed will pause raising rates. If that one sentence was said, well, you are going to want to be an owner of stocks. You're not going to want to have very many short positions because the markets would take that and run with it, especially what is happening to the dollar. It makes a lot of sense for the Fed to at least pause at this moment to let global currencies really work themselves out before we dig ourselves into an even deeper hole. So that is the big thing that is happening today. The dollar, as well as the moves in the sterling or the pound, whatever you want to call it. Now, one thing you'll notice if you are a follower of this channel, if you watch these videos or whatnot, APE is up about 5% today, whereas AMC is down about 9% today. A lot of this might have to do with the FTD situation. A lot of this is going to have to do with the split and how things are calculated, right? When APE is up 5%, AMC is down 9%, well, technically put those together, you're only down 4%, right? If you still own APE, like I personally do. It's not a terrible day today, right? A lot of stocks are not having a terrible day too. That's something we should really address as well. A lot of stocks are not down a large percentage, but there's a lot of stocks that are down today. Now, in regards to AMC, I think a lot of the pain is probably already over since we are continuing to sell off, and it's been a pretty much bloodbath ever since really early August, over a month now. It's been very, very bloody for AMC stock. I think the selling can only last so long, right? I think that's pretty easy to say, and I think a lot of people, if they were going to sell AMC, probably already did that. And like I said, for APE, I do think the FTD situation, the covering of those FTDs, probably is helping to make APE a little bit more bullish today. Now, let's talk about what we have in store for tomorrow. So for Tuesday, September 27th, 2022, that is going to be tomorrow. You have Fed Evans that speaks at 6:15 a.m. in the morning, and that definitely could move around the markets. Any Fed speaker, and like I already said, if they have anything to say about pausing rates, or taking a break, or we're close to done raising rates, anything along those lines is going to be super bullish, like exceptionally bullish. Like that would probably be the biggest day of 2022, the biggest green day of 2022 so far. If that were to happen, I'm not going to hold my hat to it because inflation is still super, super high. But to get a pause around this time, probably not a bad idea, and I think a lot of Fed speakers think that might be the move, but we'll see. Now, for tomorrow as well, at 8:30 in the morning, you have durable goods orders month over month for August. That comes out at 8:30 a.m. in the morning tomorrow. So, again, another big data point that does come out, highlighted in red, expected to be a major volatility event. You have the S&P case Schiller home price year over year for July as well. That is expected to be a medium volatility catalyst. Then you have Fed Bullard that speaks at 9:55 a.m. At 10 a.m., you have new home sales for August expected to be a major volatility catalyst. New home sales, Richmond Fed Index for September, Richmond Fed Manufacturing Index, 5-year note auction, Fed Dally that speaks tomorrow at 8:35 p.m. So you have a lot of Fed speakers. You have a couple key economic data points that come out, and combining these two could make for a pretty big move coming tomorrow. Now, if we take a look at AMC more directly and see what's going on, because we're down 9%, right? Let's go ahead, pull up the data that we do need to know, and the short interest value Estimate is sitting at $778.55 million. Estimated short interest of free float at 18.91%. Free float out on loan at about 34.5%. Shares out on loan 178.58 million. Days to cover 4.07. 100% share utilization. You also have a cost to borrow average of 17.27%. Cost to borrow max of 22.65%. And cost to borrow minimum of 15.16%. And as far as the option activity for the day, you are seeing a positive order value of 20%, so definitely not even close to bullish for the option activity for the day. And believe it or not, on Friday was the largest day in history of put buyers. You've never had more puts that were bought on a single day ever in the history of ever than on Friday. And that's a big reason why I think the markets are going down, but we're not flushing because a lot of those puts have probably already been hedged for. It's not like the market makers are getting completely blown out at this move that we are seeing today. Now, as far as the short interest on APE, you're looking at about $97.69 million worth of short positions on APE. Estimated short interest of free float at 5.3%. Shares out on loan 27.38 million. Days to cover 1.26. 77.81% share utilization. And about a 10% cost of our max. Cost of our average at 5.2%. And cost of our minimum at 4.91%. Like I said, I think a lot of this move in APE that we are seeing is because of the FTDs that are being returned, that are being bought back. I don't think APE is a better short squeeze candidate than AMC. One day does not prove anything, but I think that's pretty safe to say that AMC would be the quote-unquote real trade there out of the two. Now let's go ahead and take a look at AMC on a technical basis because we have broken under that key level of support. I was watching around $8 per share, currently sitting at $7.26 per share, well above the low of 2022 though that we have seen for AMC at $5.96 per share. So considering the fact that the S&P is almost at new lows for 2022, very, very close here today, and by the end of the day we might actually break well under the 2022 low that we did hit back here on June 17th, considering that the SPY is close to this low, very, very close, and AMC is not. Relatively speaking, we still have, let's go ahead and see exactly how far. We still have another 18.5% of cushion here before we would be at a new 2022 low. So considering that, it looks like relatively speaking, AMC is performing much better than the S&P 500. Now, the RSI supports a theory of a bounce incoming for AMC stock. It's well overdue. The RSI indicating AMC stock is well oversold at 33.23. Neutral is 50, and that oversold level is at 30. Now, the MACD, it did just go bearish. It's been fighting back and forth over the last couple of weeks now, but it does look like you're starting to get that bullish or that bearish tint to the MACD. Volume for the day sitting currently at about 26.5 million, so right around average for AMC stock going here to wrap up the end of the day. Now, I do think by the end of this week we are either going to be in straight panic mode or potentially retesting the lows and getting a solid bounce from here. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time or get yourself free stocks, link down below in the description for both of those. Thank you for watching, and I will see you in the next one.